Welcome back everybody, it's Private Profits Trading, and today we are going to go over setting expectations and how to control risk. I see a lot of new traders, they're beginning to get more in depth into the trading aspect and putting a little skin on the line, so to speak, so they're seeing the results of their actions a little bit more, which is losing a little money. So I just want to go over how we can think about controlling our risk a little better. Okay, so successful traders like Private Profits have learned to both quantify and control the risk. Many profits can be wiped out by one or two bad trades where risk was not controlled. Therefore, Wall Street believes that a good offense is really playing great defense. So Private Profits are not gamblers, and we don't want you to be a gambler. But if you risk different percentages of your account on each trade, that is exactly what you become. Think about it. If you risk 1% on 9 trades and 15% on the 10th trade, then the 10th trade results determine your profitability on all 10 trades. Since individual trade outcomes cannot be reliably predicted, keeping each trade's risk the same removes one element of randomness from the equation. Successful traders like Private Profits aren't just lucky on a few trades. They have all learned to get predictable results from an unpredictable market. They know that one element necessary to making this happen is risking the same amount of money on every trade. It's only because the drain releases the same amount of water every time it opens that the tub will eventually fill. In other words, keeping losses consistent while letting profits run is a recipe for long-term success. One way to keep the amount risked per trade consistent is to set stop loss orders. So if our Private Profit traders buys a stock, as it crosses over the VWAP line, we set stop losses and profit targets in increments of 1/5 of the overall position size. The stop loss orders are set at pre-market high or low, 1 minute VWAP, multi-day VWAP, previous highs or lows, and at whole or half numbers. Because Private Profits employs specific stop loss levels, the risk of the trade is only a small percentage of the initial investment. As you consider your situation, think about the losing streaks you can expect from trying to follow Private Profits while you are learning. Be sure to establish a risk amount you feel comfortable with, one that will help you continue trading even during a losing streak and max drawdown scenario. So us as humans are wired for instant gratifications, and traders should expect anything different from themselves. If you are not careful, your thought processes and emotional responses to individual trade outcomes will tempt you to start putting differing percentages of your account into each trade depending on how you feel in the moment. This is a recipe for disaster. With all that in mind, decide how much you want to trade and stick to that rule. So it's very important for us to realize risk management and controlling our risk. You don't want to put so much onto a trade. Say if you have $1,000 account, you shouldn't be putting $1,000 on a trade, one trade. Because if that goes against you, it's going to be really hard for you to recover if you're super emotional about making that money you just lost back. I know a lot of people would like to take 1,000 and quickly double it and speed line the process, but the first thing you need to do is understand risk management. That wouldn't be very wise to put your entire account on the line with one trade. So I wanted to keep this brief, and hopefully this can inspire someone to think about their risk management and controlling their risks a little differently. And stay tuned. I have a few more videos that will be coming. Just want you to think about this a little better, and hopefully it helps you. Happy trading, everybody.